Puneet Johnson to talk about the numbers and the tonality of HCLTech management on the call, because Puneet, I think that becomes very important too. But fill us in.
Well, definitely, it was a really strong set of numbers, and while it's just a percentage growth in terms of revenue, I think, as you rightly mentioned, the commentary going into, FY26 is one of the key ones. In terms of numbers, EBIT margin came in at about 1.5% down compared to the, previous quarter, and that was because of, wage hikes in this particular quarter, while net profit is down 6%, but all four numbers in financials bang in line. The other aspect is that the constant currency revenue growth, while down 0.8% on a quarter-on-quarter basis, the services business constant currency revenue growth actually grew by 0.7% in a quarter that's very weak for all large cap IT players. And the one big aspect was, of course, the guidance for 2 to 5% for FY26. While similar guidance was estimated for Infosys, they actually gave a 0 to 3%. So while the guidance as well is bang in line with estimates, because it's higher than Infi, that is also going to be one of the key things for HCLTech. Apart from that, the deal wins of almost $3 billion, and for FY25, it's $9.2 billion deal wins, and it's a really strong number as well. Apart from that, now brokerages actually have come out, upgraded the stock as well. JP Morgan, Macquarie, as well as we've seen both those brokerages come out with a positive view on the stock. They've said that specifically, just verbatim upgrading it to an overweight from a neutral, and they've hiked the target price to 1750, and that's JP Morgan. Just want to take one line from this particular note. They mentioned that the services business has now performed ahead of parity and is the fastest growing amongst the peer group over the last 3 years in a row now. So 3 years in a row specifically, we've seen HCLTech outperform its peers. Macquarie as well maintaining a higher target price, 2,160 rupees per share. And they mentioned that Q4 didn't see any impact of US tariff, which is one of the key talking points. And 50% of the deal bookings in Q4 were actually closed in March of 2025, and that was actually also mentioned by the management. So overall, it's a strong beat essentially in terms of the expectations around large cap IT players, and I think it might help boost the momentum going for the mid cap IT players, which are expected to report results in the next couple of days.
Okay, Mayuresh, so that's a story with HCLTech, and I think you're echoing that take that IT is going to do okay, HCLTech was fine. But I want to also come to you on what you thought about AU Small Finance Bank, and if you think that banking story is going to continue today as well, with a focus maybe on the broader markets.
Morning, Tamanna. I think financials as a space, decent set of numbers. I think what you've seen from ICICI, HDFC, what you've seen from the smaller run NBFCs as well, including AU to a large extent. And therefore, I think the microfinance part of the book, specifically for NBFCs, were a pain point for the last few quarters. Q4 might still witness a part of that pain coming through in terms of reported numbers. But with expectations in terms of the risk weightages coming off, with expectations in terms of the liquidity that RBI has created for the system as a whole, and with expectations of recovery happening both in terms of urban as well as rural consumption, with the expectations again that a large part of the smaller corporate pool, which is the SME and the MSME are expected to bounce back. My own sense is that a large part of the microfinance pain should be behind us. So I think structurally, if you probably leave aside microfinance within unsecured credit, I think there were very less complaints to be probably done.